What is up, guys? Happy Monday. So we have had the weekly candle close, and I just want to dive into the charts to give you some updates on my thoughts, what I think could be lying ahead this week. This is a big week. We have a lot of news coming out, a lot of people from the Federal Reserve speaking, and we have the CPI print on Tuesday on Valentine's Day, and I think that is also, as it has been the last months, going to create more volatility in these markets. So let's dive into the charts today, and let me share with you the levels that I'm watching. If you haven't subscribed to the channel yet, take 2 seconds, click the subscribe button down below, click the notification bell after you do so you do get those future updates. Smash the like button if you enjoy these updates, and if you are not yet a VIP member and you've been considering joining, still running a special offer for the next couple of days just past Valentine's Day. The link is in the description down below. You can join, you can sign up, get access to everything, and you have a full 60 days to try it out. If you're not happy, you can get a full refund. Okay, so I wanted to start this off with another look at the daily chart with the golden crosses, the historic data. So going back all the way to 2016, this is a log chart, and you can see I have these annotations here on when the golden cross happened, and that is when the 50 simple moving average, which I have in blue, crosses up through the 200 moving average in red. And you can see here, these are the previous times when it has occurred over the last, so since 2016, so that is over the last 6 years. You can see we had this golden cross in 2015, in November 2015. The entire bull market followed that golden cross. Then we had a death cross and we got the whole bear market. We got another golden cross over here in April 2019, and we went from about 4,000 to 13,000. Then we got this period of chop. So after that peak over here, which by the way was also the Fibonacci golden pocket, that's important to know. You can see over here it went exactly there. So when it hit that Fibonacci golden pocket, it started dropping back down, and we got this kind of chop here where we got another death cross. It was followed by a little golden cross, and then we had obviously the health crisis sell-off where the whole market nuked, not just crypto, but also the financial markets, all the global markets. So that was the only time during this period of kind of chop and uncertainty and basically unprecedented black swan with this health crisis that we haven't seen before with all the lockdowns and that kind of stuff. That was the only time in the last 6 years that the golden cross did not get followed by a lot more upside, and we had this black swan event. But that was recovered. We got another golden cross here again, and that time it was followed by the entire 2020 and 2021 bull market. Actually up to here, up to May, April, May 2021, we got a mini death cross here on that correction, but it was reversed again very shortly afterwards, as you may recall, and then we got another run over here. So even though that was kind of a small run, it actually went here from about 42,000 to 69,000. So that is still a massive gain. It's still a 50% gain. And we got our death cross over here in January of 2022. We had the whole bear market. Now we have our golden cross once again. So you can see the signal does not happen very often. In fact, it only happened here 6 times in the last 6 years. And with the exception of the black swan event for the health crisis sell-off, we've basically seen major rallies follow every single golden cross, where we're talking about 50% or more than 50% upside, 100%, 200%, even more than that in the markets. Now, the reason why I'm reiterating this again, because I did make a video about this a couple weeks back, just purely about these golden crosses, is the fact that I still see a lot of people being skeptical about this rally that we're seeing. A lot of people still think that the markets are going lower. A lot of people still think we are in a bear market. A lot of people still think due to the macro, the recession, the Fed is hiking rates, there's a recession everywhere, etc., etc. How can we go higher? There's also lots of talks about market participants basically being absent, and this whole move just being driven by a few whales or a few participants. We're not talking about massive participants here. So the thing is that I just like to look at these charts and forget about speculation on all the news and the participants and the data and all that kind of stuff. And we basically just go off these signals, off the moving averages, off these crosses, because they do not happen very often. Now, of course, there is always a possibility, just like this black swan in 2020. We're seeing talks about aliens and UFOs potentially being shot down now and stuff like that. So, of course, if the whole world goes crazy again, we can get another black swan and it can completely drop. But looking at overall the data, when we get a golden cross, the odds favor extended periods of upside as long as the price stays above the golden cross. So we're about $19,000 is the level of these two moving averages, and that also coincides with the 3-day 50 moving average is about 19,000. So in my opinion, as long as we stay above about $19,000, this trend is still up, and we potentially have weeks or months of upside ahead of us. And maybe we see a scenario like in 2019 where we got the golden cross and we rally, right? I told you here, it went from 4,500 to 13,000. So that is almost a 200% increase. Can you imagine what would happen from 20,000? 200% increase would be 60,000. I don't think it's going to do that. But if it does the same as what it did in 2019 and we pull that Fibonacci golden pocket, you can see that would be roughly about the same level as this high, between $45,000 and $50,000. And based on what we're seeing here with the data, as long as the price is above that 19,000, as long as that can hold, I think there is a possibility of that playing out. And in 2019, it happened pretty fast. It went from the point of the golden cross, over here you can see that happened in April. By June, just 3 months later, we were already at that peak. So we are starting here, we're in February now. Timing wise, things are starting to look similar. Okay, we got the golden cross here in April, we got it now early February, and things are just looking similar. So in my opinion, we continue to play the upside long until wrong. Invalidation, in my opinion, is a close back below these moving averages, so roughly below 19,000. It could wick to 18.8 or 18.5, but as long as it doesn't close that level and below 19,000, I think the probability based on these signals, based on these moving averages, the golden cross, the 3-day 50 moving average, the dollar index being below the 50-week moving average, I think the chances favor the upside until we are proven wrong. So real quick, flipping to the weekly chart over here, you can see we have that resistance. Now it's interesting to note here also on the weekly, technically we actually did here get a death cross on the weekly, the first time in the history of Bitcoin. Personally, I think that doesn't mean anything at this point in time. I think this is just the result of the moving averages. I think it's going to be a nothing burger. I think we're going to end up going higher and this is going to end up being reversed or just crossing around here. I don't think this is anything to pay attention to. Time will tell, obviously, but I'm not paying attention to this. Now, what is important, though, is the moving averages that are acting as resistance right now. And you can see also this previous high over here. So this level is very much resistance. And it was completely to be expected, in my opinion, that we do get a bit of a pullback here because of the size of the move without a correction that we had. So we went straight up basically from 16,000 to 24,000. We're hitting this resistance area here. We've got the 200 MA, the 50 MA above us. We've got the horizontal resistance here from the previous high in August. And of course, it is natural to get a bit of a pullback. That is not an issue, like I said, as long as we remain above those key levels above 19,000. So we can hang around here for a bit. And I do think that once we flip this level, it is really going to open up the door or the potential path to running back to the Fibonacci golden pocket, just like we did in 2019. So we can flip both of these moving averages and this level. If we can get a weekly close back above 25,000, I think it greatly increases the chance of us making a move towards this high and the Fibonacci golden pocket, so $45,000 to $50,000. And I do think that could still be happening this year potentially. So it is going to be interesting. The signal, obviously the bull confirmation signal for that is that close, that weekly close above both the MAs, above 25K. And if we get that, obviously I'll make a video about it at the time, but that will start to be more interesting. And right now, as long as we're above 19,000, we just have to wait for this to play out. It can continue to consolidate here a little bit. It can hang around for days or weeks, as long as it stays above that 19,000, and then let it build up a new base, let it chop around, and then, hopefully we're going to get that pump and that smash through to the upside above this level, above 25K, get a weekly close above that, and then hopefully many, many months of upside still ahead of us with a run to potentially that Fibonacci golden pocket. So that is what I am watching right now. We obviously have the CPI data that is coming out tomorrow on Tuesday, and that is going to give us some more insight into what potentially the Fed is going to be doing regarding interest rates and future rate hikes or cuts or pauses or anything like that. So the market will be watching that. We'll probably get a reaction from that. A bit of a pullback still is possible. It is also still possible that we just chop around here or continue higher. But the key levels are basically 19,000 needs to hold the support, and 25K needs to break above there to be able to get the really bullish scenario where we're above both the moving averages, and it opens up the path to potentially $40,000 levels. So as you can see, I am still optimistic about this. I am still bullish. I am wrong until invalidated, and that invalidation, like I said, is below 19,000. So if you enjoyed this video, smash the like button, subscribe down below if you haven't done so already. And like I said in the beginning, there's just a couple days left. If you want to join my VIP membership, you get access to all my courses, my training, my updates, my newsletter that I write every month, also to our Discord group where you get direct access to me and all of our other thousands of group members inside there that you can join. You can ask questions. I share daily charts, my own trade movements, trade setups, breakdown charts, all of that you get as part of VIP. So for a couple more days, I'm running a special offer for Valentine's Day. You can get in for the lowest price that it's going to be. You have a full 60-day refund. So come and sign up, go through everything, join Discord, see if it's for you. If you don't like it, you can get your money back in full within 60 days. And if you do want to stay and you think it's really worth your while, which I think it is, then obviously you're going to stay with us and we're going to navigate these markets together for the coming weeks, months, and years. So hopefully see you inside VIP. Thanks for watching. Smash the like button. I will see you in the next video.